Are you wondering how the latest Federal Reserve decision is reshaping your investments? Curious about what the housing market boom means for your dream home? Or maybe you're wondering where to put your money in this dynamic market? Well, guys, my name is McKeown, and I'm a licensed real estate agent and investor in the Dallas-Fort Worth market of Texas, as well as the Orlando, Florida market. And today, we're going to be discussing the Federal Reserve's decision that they made just last week. Now, if you didn't by chance hear last week, interest rates plunged. Now, the real reason here is a multitude of factors, but the Federal Reserve decided to pause interest rates once again for the third time in a row. This decision is likely rooted in the Fed's analysis of various economic indicators. It suggests that the recent series of rate increases might be enough to steer inflation towards what is their targeted or desired target. So what does this mean for us? Well, consumers, it could lead to more stable borrowing costs. Yes, guys, cheaper mortgage rates. For investors, this might also signal a more favorable climate, especially for more riskier assets like stocks. The housing market could see also a significant impact. Now, being a real estate agent and investor, I've been following the real estate market over the last 6 to 7 years, and I can tell you 2023 was not kind when it comes to interest rates. However, the Federal Reserve halting rates for, again, the third time in a row, and likely rate cuts to happen in 2024, may cause even lower mortgage rates to happen, influencing both demand and prices. Now, just because it's the very profession that I work, I can tell you is over the last 45 days, rates have gone down 1.5%. Now, with the information that we got from the Federal Reserve pausing interest rates again for the third straight time, they also stated that 3 rate cuts are going to be happening in 2024. Now, if rate cuts do wind up happening like they have stated in 2024, that 1.5% rate drop that we've seen over the last 45 days will continue to fall throughout 2024. Now let's jump over to inflation trends, because again, over the course of the last couple of years, I've been learning a ton when it comes to inflation and how it affects the real estate market. It's about how much more expensive our daily goods and services become over time. But why does this matter? Well, because inflation not only dictates the cost of living, but also guides crucial economic policies. The Federal Reserve is aiming for that glorious 2% inflation rate, basically enough to encourage spending and investments, but not so high that our dollar quickly loses its value. So let's talk numbers. Recently, we've seen a ray of hope. Overall inflation has slowed down to 3.1%, a slight dip from last month at 3.2%. It's a small but significant step towards normalizing our economy. But really, guys, it's not really clear cut and concise. It's just 3.1% inflation. It's not all uniform. Let's take car insurance, for example, skyrocketing, I'm sure we all can agree, over the last couple years, but just this year alone by 19.2%. Now, what I can tell you from a personal perspective is I've gotten in no car wrecks and absolutely no speeding tickets, but yet my car insurance continues to skyrocket. And in addition to that, we're talking home insurance as well. Now, yes, in the state of Texas back in 2021, essentially everyone filed an insurance claim because of how crazy cold it got here and with all the pipes that burst and flooded a lot of people's properties. So I guess technically we're paying for that now, even moving forward into 2024. But just alone, car insurance and home insurance alone has gotten exceptionally expensive. So what's the big picture here, guys? There's improvement overall, and that's what matters most, but challenges remain in specific sectors. This mixed bag of trends is what the Federal Reserve juggles as it shapes monetary policy. And for us, it means keeping an eye out on these trends as they influence everything from our saving to our spending. Now let's discuss the 2023 housing market and how the Federal Reserve's information that they gave just last week in December of 2023 is going to really set the mark for what is probably going to be a pretty crazy real estate market in 2024. Now, if you've been following the real estate market over the last couple of years, you've seen home prices just absolutely go insane. We're talking considerable gains, even just having owned a home for 12 months. For instance, if you bought a house in 2020, you could likely sell it 12 months later in 2021 and have a pretty decent profit. Now, traditionally, it takes 3 to 5 years of owning a home to just break even. So to have a house and only own it for 12 months, pay the closing costs that's associated with selling the house, and still profiting after just 12 months, you can get a general idea of how strong the real estate market has been. So really, over the course of the last 12 months, the real estate market hasn't gone down substantially, substantially, but it also hasn't seen the substantial gain that we've been seeing over the course of the last couple years as well. I would say June of 2022 was really the peak of the real estate market, and comparing that year over year to June of 2023, we only saw about a 10%, close to about 12% loss in gained equity. But as far as the housing market goes and the information that the Federal Reserve gave out just last week, I can show you guys a significant drop in interest rates over the course of the end of last week and trending into this week that's likely going to continue to have an impact moving forward in the housing market for 2024. Because really in 2023, income had to have gone up 55% just to accommodate the huge increase in rates. So moving forward in 2024, hopefully rates continue to come down, allowing housing to be much more affordable, but have some unfortunate news for buyers that are likely looking to purchase or invest in 2024, is you're gonna have a lot more competition. Now, on the flip side of things, you're likely going to have more inventory as well, because when we're looking at sellers that have a 2, 3, or 4% interest rate, they're never gonna sell and move on to a new house with an 8% interest rate. We're talking about potentially doubling their mortgage or having a substantial increase in their overall monthly payment. So again, some unfortunate news likely for buyers in 2024. But also, if your home doesn't set itself apart from others as well from the selling side, you may have a little bit difficult time selling in 2024 as well, because there's gonna be a lot more sellers that are putting their house on the market. You can certainly purchase now where there's not a ton of competition and look to refinance down the road, because I can tell you almost with certainty that moving forward in 2024, there is going to be so much more competition than what we saw in 2023. Because to be honest with you guys, there wasn't a ton of competition in 2023 because of high interest rates. And last but not least, when it comes to the Federal Reserve and the information that they gave out just last week, spending plays a huge role when it comes to inflation. Now, what I can tell you from the housing perspective, there's never been a higher debt-to-income ratio when it comes to owning a home. People are spending more on a monthly basis for their mortgage than they ever have before. Now, what that means is people are spending almost at the top of their budget when it comes to housing due to the incredibly high interest rates. So moving forward in 2024, there's likely going to be a surge of refinances to eliminate some of that monthly expenses. So you may be asking, what am I going to be doing moving forward in 2024, especially with the good news that the Fed came out with just last week? Well, first and foremost, I can tell you I actually have 2 properties that are sitting in a little over 7% and one sitting at almost 8%. So if you're gonna be sitting in the 7s, I guarantee you a refinance in 2024 is certainly going to make sense. Heck, even right now, depending on where your interest rate lies, it could make sense to refinance now, but there is a cost associated with that. In my opinion, I would probably wait a little bit longer and wait until we potentially have an actual rate cut in 2024. But refinancing is going to be a big opportunity in the next 12 months. So for those folks that were hoping for a significant real estate market crash, we got some bad news for you. It doesn't really look like it's going to happen. Now, there were some opportunities throughout the year of 2023 to take advantage of opportunities and potentially get an investment property at a relatively affordable price. But just like homes, as homes always do, they're gonna continue to climb and rates are gonna continue to go down, which is gonna cause buyers to come back out. And as I mentioned before, cause more and more competition. Now, as far as some numbers for you guys to give you a little bit of an example and what I've experienced in 2023, my numbers comparatively year over year in 22 versus 2023 is down about 30% when it comes to my real estate sales business. But fortunately enough, in 2023, I spent time kind of building up other sources of income that my total net income in 2023 is still gonna be higher than my net income was in 2022. Now use my 2023 as an example. If you only have one source of income and you're a business owner and your business suffers an even larger loss than mine did in 2023, meaning instead of a 30% loss year over year, you're maybe at 40 or 50%, you're probably gonna be struggling like a lot of us have been in 2023. But the thing is, you should never be relying on just one source of income. Try to generate as many streams of income, especially passive sources of income. So if your business does suffer a 30, 40, or 50% loss in just 1 year alone, you have other sources of income that can float you for the time being until you get that business back up on its feet. Now, due to the information that the Federal Reserve came out with last week, we're walking into 2024 with some good sense of opportunity. Moving forward, whether it be just cost of goods or home affordability, 2024 could certainly be the year for you. Thanks again for watching, guys. Make sure to like and subscribe, and stay tuned for the next video.